Welcome back to Family Investor. My name is Alex Ko. I've always been a fan of Alibaba stocks. I've always mentioned in my previous video that Alibaba stocks has been undervalued. My buy trigger of 245 stated many months ago, but it broke. It broke as low as 220. So in this situation, a lot of Baba long-term holders have given up Alibaba stocks because of huge deluge of bad news about Chinese stocks being delisted, about Alibaba getting huge fines, and now they've got a huge fines and everything's over. So think about it, a huge fine, $2.8 billion antitrust filing policy, and now we've got rainbows in the sky. People are piling $60 billion in. Is it right? Is it wrong? That's all we can accept. But let's flush the emotion aside and focus on a technical analysis, because it's going to give you a clearer answer to help you make the decision for you existing holders or for you wanting to invest in. So let me go to this Yahoo Finance chart, simple chart that I actually plotted on the 11th of April for my own purposes to decide if I should buy. The reason why I plot this and got excited about it is because it's Charlie Munger. He actually bought Baba stocks, and on his private portfolio, the news up here, which I saw on Twitter last week. And the fact that he bought it, it just triggers my mind saying he finds this stock very, very undervalued. And yes, I find it undervalued as well, because if I do my Graham's intrinsic calculation, Baba stock should be worth between $900 to $1,000. It's ridiculous, because Baba is a revenue generator that can generate up to $72 billion sales revenue. Listen, $72 billion sales revenue, and they're only worth $220, $240. Ridiculous. So this is a chart I've plotted. As I've seen before, it's the head and shoulder pattern that you can see early on back in November, December. It broke resistance, it dropped all the way down, and the death cross with the 250-day moving average, death cross came in and pushed it even lower to the 220 mark. And that's when Charlie Munger bought it, and a couple of eToro's elite investors, started buying them as well. And I thought something's not right here. So I noticed a strong resistance at 220. And then as you sit there, your risk reward is really almost minimal risk and very high maximum reward. So I actually jumped in on eToro on my personal account. Very little. So the question is, will I buy more or will I sell now? Hear me out. So now on my Fibonacci retracement, this is my freshly prepared new one, Fibonacci retracement. So if I plot from the all-time high of the $318, pull all the way back down, as you can see, the support line at 220 is where it was sitting at. It was a very, very strong support line. It came to the occasion about 4 times there. And now because of the 10% rise, it's gone between $250 mark. So it's broken the next resistance. And I think they're leaving the last rut zone, meaning that zone of torture. The 220 to 245 is the zone of torture. And now they're going to the new play area of 245 and 259. So if you're asking me, Alex, would you buy? For me personally, on my eToro, I think I'll buy a bit more, because I think we're just entering the beginning of the rise for Baba. So 245 to 259 is the new play zone, and we're at the minimum just now. So I will buy a little to trickle for my eToro, just for a bit of growth, for a bit of swing growth up there. Will it go high to 318? I think let's relax. Let's relax and let's chill. We're not going to see it breaking the next support of 259, the 259 level, until the next quarter earnings. Remember, the company went through loads of changes. So we want to see what happens in the Q1 2021 earnings. Are the Chinese consumers still buying lots of stuff from the Baba economy, or are they going somewhere else like Pinduoduo or some other stakeholders? So we really want to see the next quarter. For now, 245 to 259 is a good swing play for me personally. 245, 259. So I might go and swing play at 259 when it hits and come back down and get it. We'll see. But then we are in a position where don't just use this news of a $60 billion move to just jump in. We can buy a little, we can buy a momentum, but we still have to watch out for the news, because every other Chinese stocks are still being affected. I think they're pretty good value just now. The likes of JD, the likes of Pinduoduo, the likes of Meituan Tuanping. I think they're good value just now, but we need a bit more positive sentiment. And also we have to compare between the Chinese and the US market. The Chinese have been enjoying a good run because the COVID-19 suppression has been done really well. They managed to suppress COVID under 4 to 6 months, whereas in the US and Europe, we're still going through this pain after a whole year of saga. So I think we have to watch and see, but it's no harm putting a bit of stake in Alibaba. But for you existing shareholders, I think it's good news. You can take the relief load off your back just now because you've been buying on the dip, and well done to all of you. And for those who want to jump back in, I think it's a good time to buy a little. Don't get too excited because your risk reward at this point is being reduced just now. But then we're still a good time up. And remember, I think Alibaba is a very undervalued stock still. Even sitting at 320, I think it's still undervalued stock. As long as it performs its growth. The growth last week, which you can see, is about 40%. So as long as it performs between 30 to 40%, still keep to the growing company, not dropping below the 30% growth mark, they'll be fine. So this is me on quickly on Alibaba stock, my point of view on what you should do. And yes, I'll be buying a little tomorrow just to increase my stake a bit more for the swing trade or my eToro account. End of the day, I think Alibaba is a good e-commerce stock if you want it for the long term as well. Take care. I hope you enjoyed this. Click like for subscribe for more future videos like this.
I hope you enjoyed that video.
Please like this video.
And subscribe to the channel.
Please press the bell button. Ding dong.
Finally, watch the recent video up here.